Hello traders, the title of this video is the power of key level trading. There are different types of key levels. We have the psychological price levels. Okay, these are key levels. We have the 6 critical price levels. These are key levels. We have the equilibrium price levels. These are key levels. But there are also some ordinary key levels that I'm going to talk about in this video, and I want to demonstrate to you the power of key level trading. All right. So on this chart, we have the pink line here. We have the pink line here. This is a key level. Which key level it is? All right. You want to know. All right. I want to show you first what has happened around this key level before I tell you which key level I'm using here. We're going to go to the daily chart, and I want you to pay attention. All right. Before we continue, I would like to share a very short story with you. When I start trading first, day trading, and I was losing like the best loser. All right, if you understand what I mean. So one day, I decided to sell at a resistance level, and I went to the weekly chart, and I highlighted a key level. And as I highlighted the key level, I went to my favorite time frame, the 3-minute chart, and I have noticed that the price started displaying lower high and was struggling around that key level. So I just sold it. I did not understand very much what I was doing, but all I was trying to do is to sell at a resistance level. That's what I was trying to do. The reason is that I was fed up of losing. So I want to change my method of trading, so I decided to use a key level alone, a very important level. All right? So I sold it. And I noticed, from time to time, I'll go and check the trend, and I noticed that the price is not going above that key level. The price was struggling the whole day. And I was happy. So every 2 hours or so, I'll go back and check the trend, and they couldn't take me out because, contrary to previous days, anytime I enter the trend, I am quickly taken out of my trade. It's like, go away, go away. Professionals were punishing me each time. But this time, they couldn't punish me because I was selling at a resistance level. And finally, when the market was closed, I checked my account. I get paid, which was nice. This opened my eyes. Okay, this reveals to me that the price is the #1 indicator. The pink line on this chart, as you can see that the price went up from here to the pink line. And from that point onward, the price was just consolidating around the key level. Whenever you see a consolidation taking place, the price is acknowledging a key level, or the market is waiting for a high impact news. In this case, as the price came to the pink line, which is a very important price level, it was acknowledging that key level by slowing down. So for instance, if you were using a method of selling, looking for opportunity to sell around this pink line, wouldn't be too bad. You can see that from January 2014, which is the beginning of this year, okay, because today is the 10th of August, okay, 10th of August, 2014, all right? So you can see that it won't be a bad decision as the price, you can see it here, it just couldn't go too far away from it. It's oscillating around the pink line, okay? We have what we call a balanced market around this, pink line, if you accept that, okay? So you see now, just a very important price level, the market is acknowledging a key level. You will see sometime, or you will hear on Bloomberg sometime, when a professional will come and tell you that the S&P 500 is approaching a key level, or they will say that the NASDAQ 100 is approaching a very important level. Because what is taking place, the market participant knows the smart money, they know the key levels. So as the price either is falling down to a very important support level, or is rising up to a very important resistance level, the market market is watching. Sometimes orders are already placed along the key levels. As the price reaches that level, these orders are filled. For instance, price going up like this, some traders, aggressive traders, will place orders here to sell. As the price reaches the if it's truly a key level is a high impact a price level, a level where decisions are made, a level where we'll see a kind of accumulation or distribution taking place. All right. So as the price approaching this level, there are decisions that are made around the key levels. All right. You see now? It's a very important level. So I'm going to show you again. So you may say to me, George, I don't go to the daily chart. If I'm day trading, let's go to the 2-hour chart, for instance. And we are looking again for that pink line. Okay. And we want to see the reaction of the price around that key levels. Okay. Traders that are trading in a stock will also notice that very often one can see a surge in trading volume around the key levels. Waiting for my chart to respond. All right. On this 2-hour chart, as you can see, again, on the 2-hour chart, you can see that the price, okay, found a support here. As it went above the pink line, it found a support, display kind of double bottom here, a runaway up, deviating away from the key levels. All right, and then again it pulled back again near that key level, went up again, and then pulled back again along this key level. These key levels is behaving like a magnet point for the market as the price is oscillating around this pink line. Trader may ask me what is a key level. Okay, very often when we are talking about key level, we are talking about a very important support and resistance level on the quarterly chart or on the yearly chart. You may say to me on the monthly chart, yes, on the weekly chart also. But there are key levels on the 3-minute chart, on the 5-minute chart, on the 30-minute chart, on the 2-hour chart, on the 4-hour chart. But when we are talking about a high impact key levels, we need to go at least to the monthly chart, to the quarterly chart, and to the yearly chart. One thing we need to understand, the support and the resistance level on the yearly chart, okay, are superior to the support and resistance level on the quarterly chart. And the support and resistance level on the quarterly chart are more influential than the support and resistance on the monthly chart. So the higher the time frame, the better the key levels. So suppose you are using the key level on the 2-hour chart, on the 4-hour chart, but you may notice that the key levels on the higher time frame are more commanding than the key level on the lower time frame. Sometimes you may see a key level even on the 1-minute chart that is exactly equal to a key level on the higher time frame. When there is a convergence between the lower time frame and the higher time frame, a price coming to a very important price level, as you can see here on this 2-hour chart, at the time when the price was touching these key levels, which I have drawn from the yearly chart, on the 1-minute chart, on the 3-minute chart, even on the 2-hour chart, we notice that all this lower time frame will highlight this key level. The key level that I'm using here, I want to show you now for traders that are trading this high volatile, okay, currency pair, the pound-yen currency pair. By the way, if you are a new trader, if you are having difficulties in your trading, stay away from the pound-yen. It's a very volatile currency pair. I have said it, and if a trader is a new trader gambling with this currency pair, is their own choice. I need to mention this. This is a very volatile currency pair. Traders that are more experienced, okay, may trade it. But if you are a new trader, you may want to use a demo account before using a real money, all right? Trading is not all about the excitement. It's about making, okay, profitable trade. That's why I need to mention this here, okay? All right? We are looking at the pound-yen, okay, currency pair. On the yearly chart, you can see I highlight this candle here. This is 2008 candlestick bar right here. And the median line of that year, so the range, you see the range of 2008, the median line is the pink line. The median line of 2008 is the pink line here at 17295. It's a very, very important key level. All right? So, for traders that are trading this currency pair for next week, the week that is beginning next week, or even in the future, if you are trading this currency pair in 2014, you must not forget the level of 172.95. If we go, for instance, to the hourly chart, because I want to wrap it up this video very fast, okay? The level we are talking about is not visible on the hourly chart now. You can't see the pink line I'm talking about, okay? All right? But that levels, as I show you here, is 172.95. We can round it to 173.00, all right? So if you are trading this currency pair next week, all right, it's in fact somewhere here, but it's not showing on my hourly chart now. In fact, it's somewhere here, okay? It's somewhere here. So when we are trading next week, okay, the level we must not forget for this currency pair is 172.97, okay? Call it 97, 172.97, 172.95, 173.00. It's a zone, it's not a thin line, okay? So what we need to pay attention to, we know that the price is consolidating around the pink line, as I show you now on the daily chart. So the first thing we must not violate is the market pattern, as you can see, is to allow it to come down on the lower part of the channel, which means this pair, currency pair, coming down into the zone of, moment please, coming down into the zone of call it 170.00, all right, call it 170.00, all right, 170.00, all right. So we want it to drop it down more, to come down into the zone of 170.00, and to find a support there, and to resume the move again to the upside, because what is happening here on this okay, daily chart, the market pattern is horizontal market pattern. It doesn't mean that the price will definitely come down here, but we will prefer it to come down to the level of 170.00 before going up again. But as it's going up, the level we must watch is in the zone of 173.00. This pair will become very bullish, provided that, okay, it goes above this daily chart range, which means the price goes above the level of 175.50, call it 175.60, right? 175.60. If it goes above the range of this consolidation, which means break above that range and retest it, okay, that will be, okay, bullish for this currency pair. But as I showed traders at the beginning of this, at the end of this week on Facebook, the pound-dollar currency pair, we will expect it to go down more. That may drag also the pound-yen to the downside. So do not be surprised if it goes below the range, even up to the level of, okay, 168.00. But we will prefer that it find a support about 700, as the pound dollar also is going down. We will prefer the pound yen also to go down to the level of 170.00, and looking for support at that levels. As it's returning back up again, we need to remember the key level that that the market is acknowledging at the beginning of this year, the level in the zone of 173.00. This is about the power of key level trading, part one. We were focusing on the median line, okay, of 2008 candlestick bar. All right? A key levels is a level where that attracts a great attention, where major market participants are willing to make a decision to sell, to buy for short term or for long term. So as the price approaching a key level, these provide day traders and swing traders with excellent opportunity. If one wants to sell, one must sell at a resistance zone. If one wants to buy, one wants to buy at a valid support level. But the support and the resistance on a higher time frame are more influential than the support and resistance that we see on the lower time frame. All right? I hope you have learned something for this video also about the power of the key levels, and we put it into use to make excellent day or swing trading decision. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. We appreciate also your comment and your questions. We are the TSTW, 24 traders. Speak to you soon.